It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, March 1st, 2016. Brand new month of March, third month of this year, 2016. Boy, oh boy, had a great day yesterday. Looking for another fantastic session tomorrow. Hope you guys are able to make some dollars using last night's newsletter. Big opportunities today. But as we always know, tomorrow's a new trading day. We have another exciting newsletter in store for you guys and gals tonight. We're covering crude, S&P, gold, and euro. Oil this evening is bullish, trading inside a range and at the lows of a bull channel. This tells us to look for buying opportunities using bear traps at the lows tomorrow. The E-mini S&P is just a little bullish this evening, just a tad, but with three legs higher and a completed double up off today's opening range, we see this market as way too expensive to buy right now, and we're waiting for a two-legged correction back to support levels before we buy more. Got a good plan on the S&P if it ever decides to stop pushing higher here. Gold is range-bound this evening, and the bears have a successful breakout, which tells us to look for range rotation and to use the two-try rule for the most reliable trades tomorrow. The euro is also range-bound this evening and trading off the lows on the way back to test the highs this evening. This tells us to buy the lows, sell the highs, and look for failed breakouts tomorrow. As you can tell, we got a good report here for you guys tonight. Oil, S&P, gold, and euro. Before we jump into our charts, before we put together the strategies for tomorrow, please remember, the only place to watch the full-length version of this newsletter is on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, it's only a small portion of our full-length newsletter video. There's a link in the description of the YouTube video. Follow that link over here to sidewaysmarkets.com. And while you're here watching the full-length video, don't forget to grab your free pass in the upper left-hand corner to come out and trade with me in the live trade room tomorrow as a guest. Join our mailing list in the lower left-hand corner. All I need is your name, your email address, and then check your inbox. I'll send you an email every evening between about 7 p.m. and 8 p.m. Eastern Time when that nightly newsletter goes out. You'll never have to worry about missing the newsletter ever again. Right below the video tonight, you can download all the charts you see in the video tonight. You can download all those charts by following that link right below tonight's video on our blog. And then, of course, over on the right-hand side, you can register as a trial member. Our trial membership is not the same thing as the free pass. It's actually going to teach you about the different strategies that we have here at School of Trade. And of course, you can learn more about what it means to be a member, and we always have someone standing by 24/7, 365 to answer all your questions about brokers, charts, data, strategies, whatever you might have. No question too big or too small. Use the live support on the right side. Getting ready here to lift off this evening. Tuesday evening, getting ready for a Wednesday trading session. Hope you guys had a great Tuesday with us. We had a phenomenal day in this office today. Hope you guys did as well. Before we jump into charts, though, let's take a look at tomorrow's schedule, Wednesday, March 2nd. As you can see here, we have the ADP employment report at 8:15. We have the petroleum status report at 10:30, and of course the old beige book at 2 p.m. Eastern Time. First of all, talking about the ADP employment number, this number is going to be a leading indicator for Friday's non-farm payroll report. Kind of an interesting scenario tomorrow morning. You're not going to see a lot of reaction to that 8:15 news tomorrow. It's a real early news report, but what it will do is it will start to put the pieces together ahead of Friday's non-farm payroll. And what we usually see here is that on Wednesday, before the first Friday of the month, right, we got the employment situation with the non-farm payrolls on Friday. The first Friday of every 1 month, unless the first day of the month is a Friday, you're going to get non-farm payrolls. We've got that scheduled for Friday morning at 8:30 a.m. Eastern Time. Tomorrow morning, 8:15, we're going to get a glimpse at what that Friday report is going to look like. And basically what will happen is between tomorrow morning and Friday morning, this is where all the big asset managers, all the big hedgers, this is futures we're talking about, right? Futures markets are not a buy and hold type of market. They're used for hedging, they're used for speculating, they're used for scalping, they're used for gambling sometimes too, right? Now, you know who you are out there. But of course, we're going to start seeing people start managing their portfolio ahead of that employment number on Friday. You're probably not going to see a big reaction right away to the news on Wednesday morning, tomorrow morning at 15, but it will start playing in as the week progresses. We're going to worry about that a little bit later on. Just be aware, though, tomorrow, 8:15 a.m., right, we have that news. The big news tomorrow for an oil trader is going to be the inventory report. right? We had the 4:30 API number, which we'll talk about in a moment. Every Tuesday evening, we get the American Petroleum Institute. Their number comes out at 4:30. We got that already this evening. We'll talk about that in a moment. And then, of course, with the follow-up report tomorrow morning, which is the DOE number, the Petroleum Status Report, or as we know it as crude oil inventories. Very important tomorrow. This is not your typical Red Star news event. This event, we really have to trade around it. I give it a 15-minute buffer before, so I'm not trading as of 10:15. And then anything after 10:30 is considered gambling. If you are going to trade after the inventory report tomorrow, give it at least 5-10 minutes. I would recommend 10 minutes at least afterwards, right? But again, in my trade room tomorrow, after 10:30, after 10:15, we're sitting on hands for crude oil because it is a very volatile. And what happens is after that news comes out tomorrow morning at 10:30, it's all a bunch of gamblers, right? They're buying highs or selling lows. Very dangerous environment, especially for a new trader tomorrow morning. And as I always say, when you're looking at big volatile reactions to big news events, remember, there's no liquidity there and there's no way to practice it. So if you're on a simulator trying to trade inventories, trying to trade non-farms, right? Trying to trade the manufacturing number today, remember, you cannot practice trading news on a simulator. Why? Because there's no buyer for every seller, right? It's simulated, like the name describes. So what's very, very challenging is, and what is I think to be one of the most dangerous ways to start your career, is having that false sense of security that I practice trading news events on a simulator. Well, the reality is when you go to your live account, there won't be that liquidity there, right? Because it's not the same thing as a simulator. The simulator is going to be very accurate except for when you see these big whippy moves, right, that happen during major news events, and tomorrow is one of them. So if you ask my opinion tomorrow, sitting on hands on crude at 10:15 and everything's gambling afterwards. This is the only time of the week where we have to sit on hands on crude. Crude's a fantastic market, by far my favorite market to day trade. But the one thing we have that we we really don't appreciate about it is that on Wednesdays at 10:15, we have to just sit back, let this thing whip around. If you do choose to trade it, trade small, be careful, and hopefully you'll listen to me about considering it gambling tomorrow after 10:15 a.m. Eastern Time. Then, of course, the last but not least, right, if you are trading the afternoon session, remember the most reliable trades always come before 11:30 a.m. Eastern Standard Time during that overlap between London and the U.S. There's the most amount of volume at that time. But more importantly, the morning session is where there's actually a purpose, right? There are actually workers in the market doing their job. In the afternoon, it's usually a bunch of gamblers, rookie retail traders, speculators. There aren't as many of the people who are coming in to do a job in the afternoon. So I always tell new students, focus on the morning session. It's easier to master a small block of time between 7 o'clock and 11 o'clock, right, than it is to master the whole day. In my personal experience, the majority of my losses early in my career came in the afternoon. I was trading tired. I was trading during lower volume. I was trading after I had reached a profit goal, and it's difficult to keep your money in your account, right, in the afternoon session. If you are going to be trading tomorrow afternoon, please don't forget, though, beige book at 2 p.m. Eastern Time, and that means we're setting a 5-minute reminder, a 15-minute reminder, and, of course, a 5-minute reminder ahead of that beige book. Again, the big news tomorrow is going to be the inventory report if you're an oil trader, so heads up on that. And, of course, speaking of the oil inventory report, right, we had API number that came out tonight already. We've got that marked up on the chart, as you can see. What are we looking at for crude? Crude oil is bullish, trading inside a range and at the lows of a bull channel this evening, which tells us to look for buying opportunities using bear traps at the lows. We have a trading range, a bull channel, and the API news candle to work with this evening. The range tells us to look for rotation from low up to high, and of course, use the 2-try rule for bear traps at the lows. The bull channel tells us to use the rotation from the low up to the high, looking for buying opportunities at the low. And the API number, which came out at 4:30 p.m. Eastern Time this afternoon, every Tuesday afternoon, was a strong bear candle. That tells us this will be resistance as those sellers have stops located just above that API number candle high, and they will likely defend that area if and when price comes back right, to test it tomorrow. Three pieces to this puzzle, and we're going to see a lot of this tonight, these ranges, right? Get a lot of ranges to work with. The S&P is the only one without a range to work with. First things first, you can see we have a bull channel. This bull channel is definitely there. As you can see, we have rotation from the high down to the low, up to the high, and of course, we'll expect rotation down to the low, and we're looking to buy those lows, right, on the way back up to the high. Right? It also tells us that even if we dig in a little bit lower here and run out some stops here at 33.37, right, 33.20, even if we do dig into those lows a little bit, that is still going to be an area where, again, if we pull back all the way to the low of this, we're looking for seller failures, right, to buy that low. During the pullback, your only option is going to be a failure pattern. If you're looking to be a buyer, you're looking for seller failures. So looking for an opportunity to find where sellers are trying to sell, mistakenly, of course, into that low. You know where their stops are going to be, right? And you can buy right into those stops. Target overhead, obviously, when we come off that low, is going to be back up at that channel high, right? Channel rotation, channel rotation, channel rotation. And remember, if for some reason, if we happen to rotate off that low, we try to get to the high, but if we don't finish that rotation, right, that's an undershoot, and that's another very important piece of the puzzle. Remember, when I say channel rotation is a loaded, word, right? That word rotation is loaded. What I mean by that is we're looking to buy the low, take profit at the high, right? If we don't get to the high, though, that's an undershoot. It'll be seen as weakness, and we'll expect an overshoot on the opposite side, right, and vice versa. So buy the low of a bull channel, look to take profit at the high of a bear channel. Whatever you do, don't buy the high, right, of that bull channel, or sell the low, right, of that bull channel. The second piece of this puzzle is going to be this trading range. The trading range is a little bit tricky to find at first, but once you kind of put it together, you can see, here's a good example, range rotation. We go from the low up to the high, down to the low, up to the high, right? Buyer failure at the high, down to the low, right? So with rotation right now, just like channel rotation, we're expected to push a little bit lower, right, to finish off that rotation. Let's talk real quickly about ranges, because this is something we haven't talked about here in a few days, and you're going to see a lot of them tonight. First of all, if we do have a directional bias going into a range, right, if we have some sort of direction going into a range, that gives us a directional bias. We don't have that on this chart right now, but I definitely want to make sure you're aware of, when you find a trading range, look left, right? It shouldn't need multiple days. It should be right on the chart you're looking at right now, and if you see a direction, then that tells me buy the low, buy the low, buy the low. Now, when we have a range, you can buy low and sell high, but when there's a distinct direction going into that range, it gives us a bias. It also tells us that if we see price try to go lower, we're looking for seller failure, right, to buy the low, right? Buy the low, buy low. Bullish move into it. Same thing is true if we have a bearish move going into it, right? If it's a bearish move going into it, then it's just the exact opposite, right? Sell the high, sell the high, sell the high, and look for bull traps, right, at the high of that range. What I really want to dig into, though, tonight is I want to talk about range expansions and rotation. Here's my trading range. Take that trading range, copy and paste it up. Try to eyeball this right now. This may not be to scale, right? But copy it up, and of course, measure it and copy it down. Okay, this is going to give you your range expansions. These are really, really important. Okay, so now that you know that, I've got my range. I have my range expansions. Now, we already talked about range rotation, right? So we go from the low up to the high. High down to low. If we're coming off the low, what's the next step? Up to the high. If we're coming off the high, what's the next step? Down to the low. Now, you're going to hear me talk about this term called the 2-try rule. Right? The 2-try rule. The 2-try rule is actually really simple, and you'll hear me say this quite often. Trading ranges are difficult to learn, but once you learn them, they become very easy to